Wow, what another crazy, insane week it was. And no, I'm not talking about Donald Trump finally being held accountable for all of his sins. I'm talking about the market. Hey guys, welcome back. It was a crazy week this week. Very large swing down early in the week, a couple of large swings up later in the week. And today I want to capture the earnings report brought out by Manulife late in the week and the reaction to that, as well as just touch on a bit of an update for Elementation Couche Tard. Stick around. So I remember talking a while back about Manulife, and when I first got invested into it for both my wife and I remember reading a lot of folks talking about how Manulife typically ranged in price between say $22, $23 and up to maybe $26, $27, and it seemed to just run that course of going up as high as it was and then down to the lows of 22, 23, and it just kept bouncing back and forth and back and forth. And I can't lie, there was a time period I've been invested, and my wife and I have been invested probably about the last 18 months or so, and I started to see those patterns that so many people were talking about. And I can't lie, there was actually a point in time where I almost divested ourselves out of this stock because I didn't see it really gaining capital to the extent that I was hoping it would. Dividends were always good. Dividends were very decent, and I enjoyed that. But I thought maybe there's other stocks that I could get into to get some better capital, better than Manulife. And so, almost at the point where I started to really seriously consider, it started to actually move a little bit, and I kind of saw some progression. And I believe sometime last year, it was right around the time the dividend increased, and I thought, well, geez, we are kind of in that stage of our lives where dividends are starting to mean a lot more to us than maybe in our 20s or 30s. And so I left it. And I know that there was a big issue when COVID was here, as Manulife is heavily invested in the Asian market and the Asian area for services that they provide. And just again, not being a real wise investor at all, I thought, well, if things turn around, maybe the stock will turn around. And so I was very surprised to see in kind of the early to mid part of the week, the stock started going up a little bit this past week. And by the end of the week, the stock had gone up over 9%, almost, 9.5%, I think, from Monday to Friday. And sandwiched in there in those days, I don't recall if it was Wednesday or Thursday, they came out with the full 2023 report for their financial results. And just to highlight a couple of the things, revenue was $33.7 billion, which was up 120% from their fiscal year of 2022. And so that's an obvious sign that services were being sold much better than they were during the COVID years. The net income, however, 5.46 billion, which was down 22%. And profit margin and earnings per share were also down, but a lot of this, they're saying, is related to the increase in expenses that they had incurred to get that revenue up 120% from 2022. And so for some, that might be a bit of a red flag. For me, I kind of thought, well, it costs money to make money, and hopefully those expenses are not going to consistently be there. And if the revenue continues on the same pace that it is and can increase, of course, then this is going to be good for all of us as shareholders. So I looked at profit margin was 16% and earnings per share $2.62 per share, both of them down from 2022. But then also in the report, revenue is forecasted to grow 18% per annum on average over the next 3 years, compared to a growth in the industry that is expected at 10%. So again, something very positive there. And the stock, as I said, just kind of took off, went up over 9.6% over the course of the week. And for me and my wife, being income investors as we are, one of the really, really nice highlights was the Manulife decided to increase their quarterly dividend 9.6%. And I believe now every quarter they are now paying an exact 30, or excuse me, exact 40%, or let's try that again. They are paying an exact 40 cents per share every quarter. And so this is one of those stocks where I kind of think now, to all the different emotions and such that I had back when I first got in, and it's not moving up enough for me. It's not gaining such capital as I want. But again, depending on your situation, this I'm starting to believe is maybe a perfect stock for my wife and I, because it's a solid company. It's been around for many, many years. It's one of the huge players, always near the top of the trading volume on the TSX. And it has a very solid dividend that just keeps going up year after year. And as I said, with the COVID pandemic hopefully behind us now, and their control, if you will, or their large piece of businesses in the Asian markets, this is going to be a company that's really going to do us well with the dividends. And I've talked about it in the past. And when I look at, I'm just going to check my chart here. When I look at my wife and my portfolios, so putting her TFSA, my TFSA, and my RSP, which is not a lot of money, but it's enough, and putting that all together, Manulife is actually currently our number one stock. And our number one stock in the sense that the capital return, which is actually number one as well, the capital return alone from when we purchased, we are up 43.4% collectively. Now, my wife is well over 50%, but my purchase time was a little bit different than hers, and so I had to pay a little bit of a higher price. When I factor in the dividends that we've already received, we are up 51.67%. So again, this isn't that lightning in a bottle, but again, coming out of COVID with prices the way they were and Manulife stock, the feeling of so many about how it was just up and it was down and it was up and it was down. Well, I was taking chances every time it went down, and it was a bit of a pattern. And I was purchasing when it went down into that 22, 23 range. And today it's well up over, I think it's over $33 now per share, along with a really decent dividend. So I guess the point here for me is to not sell you on Manulife stock, but I guess the point I'm trying to make is good stocks do well over the long haul. They don't always make you 40 or 50%, but depending on the time of when you get in, and I'm not telling you to time the market here, but if you watch the dips and the swings, the up and down and the pricing, and you can get in at a decent time, generally the good companies are going to rise to the top and their profits are going to maintain and increase. Their dividends are going to increase. So on a capital basis and on a total return basis, you're going to do pretty well. The other stock that I wanted to talk about just briefly is Alimentation Couche Tard. And again, this is another one of those sweethearts in our portfolio. Both my wife and I have in our TFSAs. And this was one, again, totally different than Manulife, if you will, because there really isn't much of a dividend at all. This is strictly, at this point in Couche Tard's existence, is a growth stock. Their dividend is less than 1% per year, quarterly payment. But it's one that, again, I got into because I thought the business model that these guys were pulling off was very interesting. And again, we got in at a very, very attractive price. And all it seems to have done since we've got in, the company is just expanding like crazy, buying up, North America and Europe. Gas stations, convenience stores, car washes, etc. I've done multiple videos talking about them. But just in the last month, and again, is this a return to a beginning of a bear market? Who knows? But just in the last month, Couche Tard's stock price, has gone up 9.9%. And it's crazy, excuse me, to look at the fact that we have such a good return in this stock, given that the dividend declared and paid to the shareholders is less than or right around 1%. And again, that list that I tell you about on our list of stocks, Couche Tard is actually number 2, right behind Manulife. And the capital return for us collectively is 31.51%. And the with dividends, the total return is 32.74%. So again, roughly around a 1% dividend pay there, which is not great. But given all the other stocks that we have, to know that this thing is sitting at number 2 with just the capital return is actually incredible. And again, it's a beautiful stock. I've gone on before about how much we love this stock, and my hope that with their dividend percentage increases in the next 5 or 6 years, we're hopefully getting a Fortis type dividend from the stock. So that's going to wrap it up for this week. Hopefully you guys had a decent week in your stocks as well. I want to thank you guys for sticking around. And as I always ask, please, if you've enjoyed this video or any of the videos on my site, consider hitting that Marksy's Place button down below and subscribing to the channel. You will get notified every time I bring out a video. Until next time, take care, and we'll talk to you soon.